that much to cheer about at Yahoo. Sales for Yahoo's display advertising business dropped 11%. And joining us with more on the lackluster revenue is Rebecca Lieb, digital advertising and media analyst at the Altimeter Group. Rebecca, thanks for joining us. So Mayer has been at the CEO position for a year now. She's done a lot in terms of changing the corporate culture, in terms of revamping Yahoo Mail, 16 acquisitions. But bottom line, investors aren't buying.
Investors aren't buying, but we have seen Yahoo turn around in a lot of ways over this past year. You know, what Mayer is doing is turning around a battleship that has been foundering for quite some time now. Digital sales are not beautiful at Yahoo, but there's downward pressure on display advertising across the board in digital publishing. I think Mayer has got her eye on the distant horizon of increased mobile sales and advertising products that are not direct display advertising, those boxes and rectangles that you see on the site that are declining in price across the board.
So you're saying it's symptomatic of the industry at large, the decrease in advertising sales, not just specific for Yahoo, and not yet an indication that her turnaround plan is not working?
I think she's only setting her turnaround plan in motion. Time will tell if it will actually work. It's something that's going to be a long-term strategy that's going to take Yahoo time to build because they don't have certain assets that companies that like Google, where Mayer came from, or Facebook are also struggling to build. For example, a strong mobile foundation.
But she has bought a lot of assets, and she has had about 16 acquisitions, one of the biggest being Tumblr, $1.1 billion. So she has been buying traffic, but hasn't been able to monetize that yet.
It's going to take a while to monetize that type of traffic, and what she's trying to do with acquisitions like Tumblr is very much like what Facebook is trying to do in Instagram, create more visual information that can then be monetized with advertising. She said something interesting on the call today, which is Yahoo wants to feature more user-generated content.
Right.
She also did that by making Flickr a much more free service than it had been in the past. She took away a lot of the subscription barriers. She can sell advertising against users sharing their content as opposed to investing in creating the content, or as Yahoo has tried in the past, deals with Hollywood that is a much more difficult capital investment.
And that seems to be the trend, user-generated content, especially with regards to video streaming now, with videos, the Instagram version of videos. And I want to focus on what she said on the call, and I'm quoting here. She said, "I'm encouraged by Yahoo's performance in the second quarter. Our business saw continued stability, and we launched more products than ever before, introducing a significant new product almost every week." So we have a new product almost every week. They are paying for content production. But is that enough? I mean, we've bought Tumblr for $1 billion. How are you going to get back a return on that kind of investment?
People are asking the same thing about Facebook that paid the equivalent price for Instagram. It's going to take a while to weave these two companies together and to create advertising products that combine content and advertising. So it's not as interruptive as banner and display advertising. That's where she's going with her mobile strategy. There isn't a lot of real estate on screens that are getting smaller and smaller for the banner ads that have been Yahoo's bread and butter these past decade or so.
Now, Alibaba has also been lifting Yahoo's performance, as well as Yahoo Japan. In fact, they've done more from their investments in Asia than they have in the US. That's been a very strong factor in their second quarter earnings.
Absolutely, and Alibaba brought in a very strong cash infusion that has enabled Marissa Mayer to make these acquisitions. But Mayer does bring pedigree and credibility to Yahoo that some of her predecessors have not. She's made it a much more desirable place to work, and if anything at all, she's lifted Yahoo into a company to watch rather than a bit of a laughing stock.
Well, this is true. Now, the stock is up 70% year to date. Investors seem to be happy with her performance. 1 year into her performance, what grade would you give her?
I think she gets a solid B+ for what she's done this past year, for setting a strategy, which Yahoo has not had for years, keeping her eye on the horizon and on the ball. Now the question is, can she follow through and deliver on that strategy?
Okay, solid B+. That's not too bad. We're going to have to leave it there. Thank you so much.
Thank you,
Rebecca
Michelle.
Lieb, Digital Advertising and Media Analyst at the Altimeter Group.